Well, welcome to C1 Funds, a channel tapping into the next wave of breakout startups in the digital asset space, trading on the New York Stock Exchange under CFND. We're privileged to be joined by Naj Kidwai, the CEO. First and foremost, welcome, sir.
Great to be with you, Kyle. Thanks for the opportunity today.
Yeah, it's such a pleasure to get you on. I want to dive into this with first and foremost because you guys are giving some access to the digital assets a lot of retail out there might not even be aware of. But maybe you want to just break down exactly what you guys are doing?
So, Kyle, we run a closed-ended fund, which is actually listed on the New York Stock Exchange under the ticker CFND, and it gives institutional retail investors exposure to companies like Kraken, Ripple, Consensus, Chainalysis, and many others, while they're still privately held. And anybody can access this with a brokerage account, no minimums. It's liquid, it's regulated, and it's listed.
Yeah, no, incredible. I guess this is kind of like an option to pre-IPO and typically getting better values on perhaps some of these assets than otherwise if they were public. But regardless, do you want to talk a little bit about 2026, kind of what you guys are focused on and what's kind of going on with C1 Fund?
So 2026, I think, is going to be a stellar year for IPOs. Today, actually, BitCo went public as the first sort of major IPO this year. You're going to see hopefully companies like Kraken and many others like SpaceX also go public this year. And I think with SpaceX, we might see the first $1 trillion market cap company, right, go public this year. So we're quite excited. I think in the digital asset space, you've got companies like Securitize that's also going public via SPAC merger. You've got a bunch of other crypto companies that have actually filed. And you've got companies like Ripple also looking at 2027. You've got companies like Binance and Tether potentially also exploring listings over the next couple of years. So I think a lot of the larger digital asset companies, these tend to be profitable, they're regulated, they're licensed in the jurisdictions they operate in, and they're all exploring sort of public listings over the next year or two.
Now, just rolling back a little bit, what led up to that aha moment? How did you kind of get involved with C1 Fund?
There was a huge opportunity to provide access to the leading companies in the digital asset space, but with the safeguards, liquidity, and regulation of a publicly listed vehicle. And a lot of people today, getting exposure to companies like Kraken and Ripple without being a high net worth individual is very challenging, right? So to be able to provide that access with no minimums, the ability to buy that with your brokerage account sitting anywhere in the world, we felt was a very compelling proposition. And because we'd done the world's first crypto SPAC, we'd looked at many of the companies now in our fund in the context of taking them public. We'd had relationships with their investors, with their boards, and with their management teams. And that unique access gave us the ability to acquire that stock on behalf of our investors, who can then get exposure to companies like Kraken and Ripple through C1 Fund. And I think it's the first time globally that in the digital asset space that investors can get exposure to these companies while they're still privately held. And we've seen companies, stellar performances last year with companies like Circle and Bullish and eToro that had their IPOs. And this year we expect companies, BitGo again today has priced well above its IPO offering price, and I think that sets the tone for the year ahead.
Yeah, and I think there's a lot to be bullish on here as we pass it off to the viewers. As always, we'd love to know what you think in that comment section, but consider subscribing for news and catalysts like this as it comes down the wire. Of course, we'll bring it to you here, but on that, as always, we look forward to catching you in the next one.